Okay, guys, one more thing. Fibonacci. Then we have got, for now, the technical knowledge, or we've covered then all the technical elements that we're going to implement in the trading strategy as I'm going to teach you. So Fibonacci was a mathematician, an Italian mathematician 200 years before Christ, so quite a long time ago. And he discovered a ratio, a mathematical ratio that repeats itself in nature. If you look in here, you'll see that's the form of a shell. So those lines in a shell that you would cut open a shell, it's got the Fibonacci sequence in them. The ratio of the amount of the way that the sunflower seeds are ordered in a sunflower is in the Fibonacci sequence. So it's the optimal sequence so you cannot fit more sunflower seeds in a sunflower other than within the mathematical sequence that Fibonacci discovered. So the question will be, okay, what does got shells and sunflower seeds and the way that the stars are arranged got anything to do with trading? Well, it's quite mind-blowing actually, because we use the Fibonacci sequence in trading. Specifically, we use the Fibonacci sequence to establish a swing retracement, and we use the Fibonacci sequence to set targets. In this strategy that I'm going to teach you, specifically to set targets. So exciting stuff. This is our first, peep at the strategy that I'm going to teach you. So first of all, Fibonacci, where do you get it in your system and how do you draw it? In your top toolbar, there's a little F, that's for Fibonacci. You just click on it and just draw it on the open screen like that for now. You can right click on it, go to properties of Fibonacci. Now you will you might have a lot of levels in there. Remember, Fibonacci is a repeated level. So the only levels that you need in there is the following, guys. So is the 0.382, otherwise known as 38.2%, the 0.5, which is the 50%, the 0.618, which is the 61.8%, 1, which is 100, 0.782, which is the 78%, then minus 236, which is the 23, and then minus 0.618, which is the 61%. Okay, so just clean all the other riffraff out of your Fibonacci and just make sure that those numbers are the numbers that you currently have on Fibs. All right, cool. So, and then you can change it whichever color you want, drive lines or what have you. Mine's yellow. So how do we use Fibs in our trading? Well, let's have a look. We've talked about swings, and we've talked about how the market moves, higher highs, lower lows. I want it to be a little bit more cleaner, because then I would be able to show you better. Let's go to daily for now. Why is this? It isn't. These candles are also. Oh, but I'm on GT 24/7. That's why it's broken. Okay, so let's just go to not GT 24/7. I'll go to the other one, show you, and let's just zoom out a little bit. Why is it not going any further than 2013? Really? Just go back here. All right, doesn't matter. I'll show you on a normal Fibs. Okay, so here we've got a swing on the daily. So you draw. Remember, a swing is from a low point to a peak. Then it pulls back and it runs up again. So now, typically, if you draw your Fibs from there to there, that's a swing below 38% that pulls back. So that's 20 something. That's regarded as a 38% swing. Right? Goes into the fibs, only doesn't reach 38 and then run off. If we redraw it over there, that will be the low. Then this pulled back to the 50% number of fibs and then ran up. Okay, let's go to some other swings. Go down to the hour level. Let's get into, let's draw this one. So you had a swing going up there, pulled back to the 61% level and then bounced off. Okay, 61% level is also known as the golden ratio, the pi ratio. It's the most powerful sequence within the Fibonacci number set. So yeah, uptrend, it pulled back. So clearly you can start seeing where we're using it. We've got a swing and we want to know, a swing always retraces. No swing just moves in one direction going up and never retraces. And that's one thing that we use the fibs for, is to see how far potentially will a swing retrace. So it will retrace to the 38, 50, 61, 78 and back to 100, which obviously will be a complete reversal. So this one hit on the nose of the golden ratio, 61%. All right, and then it ran up. Okay, so let's see. Yeah, we've got so yeah, down to there. So it moved up, and it hit 50% on the nose, ran up. Okay, and I'm looking for nice clean swings to show you. This will be an example. So we drew from there to there, came down to 61% on the nose. It tested 61%, but then reversed, hammered through 78, hammered through 100. So that was a trend reversal. But note, came down to 61% on the nose. Tested it right there. Played with it. Bulls did not have the Vuma to run up. Broke through to 61%. Okay. Let's have a look at the swing here. So from there to there. So what does the market do? It comes down, it pulls back, it plays around in the 38% and then hammers out of 38%. Guys, initially you're going to struggle to really follow trends and to see trends. With a lot of experience and practice, you will see that. There is an instrument or an indicator that we can add. I think it's under trends. It's the YZ-Week, probably under custom. Let's see if it sits here. Yeah, the zigzag. So zigzag, you can give it different parameter inputs, and then what that draws, it draws the swing for you. And then you can go, you can alter the zigzag. You can start making it smaller, like 4, 5, 1. It's the different deviations it uses. So the smaller you make it, as you can see, then it starts following the swing. So a lot of times, and I'll have to go check which ratio to use, but in the beginning, you know, we can use that to help you just draw the swings for you. So let's just leave that for now. This swing came down, pulled back to 61%, ran to the 0 point, and then pulled back. So we'll look at this one here. Pulled back to 38, came back, didn't crack the shoulder of 0, so that retracement is still in action. Went into 61%, just breached it, and then ran off. So you can clearly start seeing there's a notion here. Eh? Isn't it incredible how the mathematical equation is just being reproduced on markets? I mean, it still freaks me out when I see it. There is a 50% ratio. Let's go here. Draw that up to there. That was a 50% ratio. Here it obviously would hammer through it. So that's what we use fibs for. So fibs can be drawn from swing to swing, and to give us an indication of where the okay, to give us an indication of how far that swing will pull back. All right, that's what we use it for. So, for instance, if I wanted to see this swing was be there, it was a 38% pullback. The swing here was much bigger. It was a 78% pullback. It's right on 78. If we look at this swing there, pull it down to the bottom, that went to 61, pierced 61, so that's 61%. We regard that still as a 61 pullback. So as you can see, it runs right over it, and then came down. So that's how we look at swings to see as a pullback. For instance, if you are in a trade, let's go to Ethereum, and I've drawn to increase mine. So Ethereum was downtrend, remember, and now it started pulling back, and let's clean this up to the 4 hour, or actually to the daily. And Ethereum ran up straight up to 61%, pierced it, but that was, so if the swing was done and the swing started moving against us, or the market retraced, I would want to know, okay, how far potentially can this thing retrace? So I draw my fibs from top to top, and true as Bob, it hit 61, and then boom, it started running down again, right? So this is typically where we would start using fibs, is to establish where a swing is, how far a swing will retrace, so that we can establish levels. The other thing fibs is going to be used for is to tell us, let me go back to 5 minutes, is to tell us how far so now we know how far a retracement can take place, but we would like to know the following things. Every time you trade, you want to know where's the entry, you want to know where's the potential target, and you can have more than one target. You want to know what that target is. How far will you allow the trade or the trend to move, make you money before you close it? Okay, because remember, you don't know what happens at the right-hand side of your screen. So if you were in this trade and the trade got there, you did not know that there was a green candles and a retracement happening on the other side. So we need to know in any trade, to manage our risk, we need to know where to enter, when to take profit, and where to set our stop losses. So in other words, if the market moves against us, where to set the stop loss to protect us. So I use Fibonacci's numbers and the Fibonacci sequence lines 100% for that in our one strategy. It is target setting. So for instance, let me give you an example. Here we go. So let me just delete that. Flips there. So this was a trade that we traded. So markets came down the previous day, gapped open. Now when it gap open, I wait for the swing. Okay, so I draw the fibs from bottom to top of the swing. So it went up, pulls back, pulls back, pulls back. In this case, it hit almost at 61%. We would have entered the market, and now where's our target? Our first target is 23% on the opposite side. All right, so first target is there. Second target is at 61%. Then the trade is done. Get out of the trade. All right. We do not hold our position after 61. We exit our position after 61. So what did we use the fibs here for? We draw from swing to swing. We entered the trade on a Fibonacci entrance number, and we exited the trades on the Fibonacci target numbers, 2361. Okay. Here's another one. Market opens, pulls back 38, knocks out. So we would have entered on a 38% entry. And don't worry about where I'm saying entries because I haven't taught you the strategy. I'm teaching you Fibonacci target setting. All right. We're not at the strategy yet. But this is one of the strategies. This gap strategy with the FIBs is something that we're going to use. So what is happening here? We would have checked FIBs. FIBs pulls back 38. We would have launched our trade here at the breakout. First target 23. Second target 61. Now, in this case, it didn't reach 61. Okay? It stopped just short of 61%, like a couple of points, which does happen. In the world of trading, we still regard that as a 61 level because it was so close to that 61 level that it exited. Yeah. So point being is we would have exited there. We would have missed the 61%, but in the strategy execution, I'll still explain to you what we will physically have done in here. We would have used the divergences and what have you to get us out of that trade, etc. So here we have a gap. Obviously, there was no FIBs entry yet. So you could draw a FIB here. The market never executed out. Okay. Pull back to 61. Tested that, but failed and ran down against you. So to recap, Fibonacci, mathematician. What do we use Fibonacci numbers for? We use the Fibonacci numbers to understand the swings, to monitor swings, to establish a retracement of a swing. So if a swing is in movement and it retraces, this is what we will use to identify specific levels of that retracement. We look at 38, 50, 61, and 78%. Those are the different levels of a physical retracement. All right, and then we also use the Fibonacci to set our target. So if we're in a trade, where do we take our money? We take our money on the 21, we take our money on the 61% of Fibonacci numbers. Go have some fun with Fibonacci. You can do it on the Aussie. You can do it on, like here, I was in this Ethereum trade, well, still is. And if we look at here, I draw Fibonacci here, it went straight down to the 61% right there, 61%, and hammered down. It hit the first 23, it's on its way to 61. So typically, there I've used FIBs. Okay. Here's another, so on any swing you can draw FIBs. So there's a swing from there to there. Fibonacci, that was a 38% swing because why? It just pulled back to there, come through. Now the 61%, as it's known, it's the golden ratio. That's the strongest number. So you generally will see when the market pulls back to a 61% and it runs off like it did in this case, the runoff is much stronger than any one of your other ratios. 50% we regard, or I regard, as a neutral. So it's a very weak Fibonacci number. So any swing that pulls back to exactly 50 and moves on is a very weak swing. So the expectancy of that movement is not great. So go and check FIBs, draw some lines, see what you see, and if you've got any questions, then tell me. But just to recap, we use it for swing calculations to see if you have a swing, how far it will pull back. And we also use it for target setting. Okay, so we use it for target setting and we use it for swing calculation. If we look at here, let's go pull back to there. That is a 61, and it almost hit the 78%. 61%. If we go from there to there, that was 61 on the nose, literally on the freaking line, and then the market moved on. All right. Now you can draw it from these smaller lines. These are all 38% until it ends. So incredibly powerful tool and incredibly usable within trading strategies to set specific levels and specifically to set specific targets. FIBS hasn't been used a lot in the last, I would say, 5 years probably. It's been used a lot more amongst traders, became very popular. So it also has that element of self-fulfilled prophecy. When you have a swing, you draw a FIBS on it, and you've got 10,000 other guys looking at the same level. They all tend to have the same behavior, and that is that, okay, if it reaches that level, then that's a new entry level. For now, go draw the FIBS, set it up, and then I will chat to you guys later.